Thank you for tuning in to my Obsessed and Optimistic channel. We're going to find you money today, and we're going to do it by saving taxes by paying your children wages. Let's get into it. I'm going to start by first giving you some general overview of how you set up the structure and some of the steps and how you do it. There's a bunch of technical concerns and questions, even some code sections and regulations. I'll get into that towards the end so you can get the broad strokes up front. If you want that detail, you can skip straight to that. So let's get at this, paying your kids' wages. Now, this does come from the aspect of I run my own type of business. This is for the small business entrepreneur that has children that are going to assist or help them in the work. To pay your kids' wages, it is a tax-saving item, but they do actually have to work in the business. You have to consider their age, their ability. It has to be legitimate stuff. It can't just be, I want this tax avoidance. Those are the type of things that will get you in trouble, and it will get thrown out, and you'll end up paying more taxes and penalties. So considering kids and what they can do for work, here's some examples. People always like those. Your kids can help with your online baking. Maybe they're helping bring some of that into QuickBooks. Maybe they're categorizing some of the expenses. They can work reception at the front desk, answer some calls, help maybe with mail or things around the office. They can help with janitorial items, emptying the trash. Maybe you're going to have them help paint the office or do some of the remodel work you're going to do together as a family. These are the type of things they can do. They can even engage maybe sending out invoices or some of the periodic billing that has to happen at the beginning of a week or the end of a month. Those are all things that you can teach your children. They can work in the business, and it's legitimate stuff that you would pay somebody else to do, if not them. Let's go through some examples of what's not good. I hear this all the time. Someone will say, I used my kid's likeness in the marketing that I was doing for my business. So I paid them $15,000 this year for helping, do the marketing. And all it was is they had a picture of their family on the wall in their office. The kid never came in. The kid never did any work. And here's the really sketchy part to it. In today's day and age where you can use AI to really create a lot of the pictures that you need, if you were to pay some model or spokesperson to be on your website to be the image of whatever it is that you wanted to project, you're going to pay them like $500, maybe $1,000 for that image use. And that's it. You're not paying them $15,000. So if you're going to, one, go into a space like, I'm using their likeness in a picture, one, it's aggressive. They're not doing real work, and that's a problem to begin with. But also it needs to be to what market price is. So when you are paying your kids to do work, you need to be considerate of what would the market price be for this? Am I paying a fair price for the child? Again, if you come off like I'm just trying to move this money around and not pay taxes and you're trying to scam the system, you will get caught for that. And that's not going to play to your benefit. Some other things that I've heard. My child gives moral support to people in the office by walking around and saying hi to everyone. That's not going to fly. Another one, imagine paying your 5-year-old $40,000 versus $5,000. I mean, the numbers have to be reasonable. A 5-year-old isn't going to work at a fair hourly rate, enough hours to get to $40,000 for a year. And honestly, if you're in that box, that is the child labor stuff you shouldn't be doing. Another item to be aware of when you're paying children is rounded numbers look really suspect. So your child should be working for some given hourly rate and putting in particular hours of work. And imagine any employee that you have. It's not like when you pay them wages at the end of a year, it's going to magically equal $12,000 flat. It would have some variety to it if you're really tracking the hours and the hourly rate that's being paid. Even more so, imagine that every year it's always $12,000. These are the type of things that will get you in trouble. You need to track the actual hours. You need to have paychecks. You need to have job descriptions. It can be simple. It doesn't have to be anything more crazy than what you would do for your typical employees in a small business. Yeah, we document some of that, but not to a crazy extreme. But there is documentation. You're not paying your employees with nothing in their employee file. And you would need to do the same for your child. So make sure that when we're trying to pay the child, we're finding reasonable work that they can do at a fair hourly rate, and that we're documenting the process of the time that they're putting in, what days, and that they are getting paychecks and things, noting that. All of these things will justify your position and make it very simple to do versus putting yourself at really high risk. One of the things that I like to do when it comes to payroll is I outsource. I'll use a company like Paychex or ADP, and there's a bunch of other payroll providers I worked with over the years. You could use any of those. But I know how to do all of it. From a compliance standpoint, for the small fee I pay them, I'd much rather they do all the filing quarterly, annually, and making sure that the reports are filed for this payroll that's going to be unusual where we're paying children. There's some benefits and some things that we want to do I'll get into later. It takes all that off of you to use a simple payroll company. So not that you have to, but my suggestion, best practices, I personally do it myself. So let's talk we want to pay the child. How can we do this to reduce some taxes? So the standard deduction for your child, or really for anyone, but we're discussing the child, for 2025 is $15,750. So I'm just going to work with the number 15,000 because it's easy, but you could run up to that threshold if you wanted. So if you pay the child $15,000 out of your business, the child has to pick that up and pay income taxes on it. Well, the standard deduction covers all of that. So they have no income tax on that wage they got paid out. Now, had you left that in the business, the assumption is that income would have went to you, your personal return, however it gets to you, and you would have paid income tax at your income tax bracket. Top tax bracket is 37%. Somewhere in the middle, maybe 25%. All of those are huge cuts to this chunk of money where if you paid it to your kid at their standard deduction rate, they're not paying any taxes at all. And that is the purpose of what we're trying to do. If we can or are using our children in the business, we should be paying them a reasonable wage because all of that money up to this $15,000 threshold is going to be tax-free and still coming into the household coffers for whatever we need to use it on. So let's get in some details and make this a little more complicated. The general is that's how we're saving taxes. But now we have to do it properly so that we qualify. Some structures will qualify to not have self-employment tax or Social Security and Medicare taxes taken out of the wages. There are even some that won't have to pay the federal unemployment tax, or they call it FUTA. So normally when you're paying wages, you guys are used to your W-2, you lose about 7.65% to Social Security and Medicare. Everyone loses that half. When you're a small business, you're paying both halves. The employer pays part and you pay part. It's essentially 15.3%. So that's what you're losing on every paycheck that goes out. Now imagine when you pay your child, if you're paying and it's 15.3% compared to your 37% tax bracket, and they don't have any further tax on it, it could still work to be just fine and pay the taxes. But there are structures where you don't have to pay that. And if I can save yet again another 15.3%, I want it. There are only particular structures where that work. So one structure is a family limited partnership. And in that partnership, it's working with business. The family limited partnership can work in conjunction with your main S Corp or front-facing public working business, whatever that service or widgets that you sell type business is. You can set up a family limited partnership. Both parents of the child have to be owners of the partnership for the child to work under it and qualify under these rules. You can also have a sole proprietor type Schedule C, or it's considered a non-existent entity. You file it as part of your personal tax return. You can create a sole prop as well, as long as the owner of that sole prop is a parent of the child that is working underneath it. It is key that that is the structure. I will also point out, in today's modern world, there's a bunch of mixed families with kids from different relationships. So you could have a problem where both parents are the owners of the family limited partnership, but they're not the parent of that child. So that is going to be a conflict in what does and what doesn't work. This structure is very specific that it has to be the parents of the child, or you could do a sole prop, the parent of the child. And sometimes that structure will help you get around some of those complications in the modern mixed family. So I'm pointing those out as a very key item. I don't want you to go to all the work to set up one of these structures to use it and then find a conflict. It is very specific. It has to be the parents of the child, or it can be the parent of the child if you're doing a sole prop. So in that space, a few things that will still throw it out. I guess some people, I feel like I'm saying it very clear, but I see a lot of errors. So I'm just going to give you some things that won't work. What if it's a grandparent and one of the parents? That will not work. What if the child owns part of the partnership? There's a lot of parents that like to give their kids part ownership. They feel like it's either going to tie them into the work that's being done or a way to pass some of the equity along to them in advance. So maybe the tax effect in the future doesn't happen. There's good strategies for that. This particular one where you're just trying to pay your kids and you're using the structure, it's not the time for that. And by adding a child to ownership, it now again doesn't qualify because they would be an owner and it has to be the parent of the child. It can't also be the child. Another item is trusts. A lot of people will create a trust to try to protect some of their wealth. If the owner of this family limited partnership is a trust, that is not the parent of the child. It is a separate legal entity. You want to use it on the one side to protect yourself legally, but then it doesn't let you fall into this box to be able to pay your children. Easy answer is set up a family limited partnership that works in conjunction with your main business. Its main purpose is going to be the employment of the children. It can get money from your main business shifted over to it. It can pay the wages for the children for the work that they do. Keep it simple. This is an easy way for us to get a tax deduction, save several $1,000s, and as long as we stay compliant in this box, it will be simple. We can do it every year. A cyclical, clean method, keep some simple payroll data. We're saving thousands of dollars. Don't complicate it. One of the other questions that I get in this space is, well, what if I have an S corp? What if I have, some other type of corporate structure? Can I pay my children from there? The answer is yes, you can pay your children. The issue is going to be that you don't get the payroll tax savings. So again, 15.3% for payroll taxes. Let me give you an example. Let's say the parent's in the 37% bracket, and let's say I'm paying a child $14,600. That's what they worked. The corp would get to deduct the $14,600. So there you get some tax savings because that's not going to flow through or pay tax at the corp level. The parent avoids that 37% tax, which on $14,600 would be $5,400. Because the $14,600 is under the standard deduction, we talked about that earlier, that $15,000 number, the child pays zero income tax. The FICA tax, which is the payroll taxes, the Social Security, Medicare, federal unemployment tax, is 15.3%. It's going to be $2,235. So if the parent saved $5,400 and the FICA tax was $2,235, there's basically $3,200 of tax savings that they got by paying their child, even paying the payroll taxes. So I just want to mention that even in a corporate example where you're paying the taxes, it can still be beneficial to you as long as those numbers work out for you. Again, as the parent tax rate goes down, the benefit is less, and the hassle of dealing with this payroll is still there. So those numbers do have to line up. I will tell you in most cases, even at the 25% rate, it's going to be worth doing. If you have more than one child, those benefits increase even more. So I wanted to talk about a few code sections to give you specifics. I'm saying these things out in a web space, and maybe people want to know, well, can I look it up myself? I need to know that these are legitimate. Also, as I'm giving all of this advice, I am not your tax preparer. I'm not trying to give you a tax position. I'm not trying to give you a legal position. I'm here for education. You will need to take this information back, working with your CPA or your tax preparer, or maybe you want to have it looked at with your legal counsel. I'm going to give you specific code sections that you can look up yourself, or that you can bring to them to look over to make sure that this is a valid position that you can take. The purpose of giving the code section is not for me to represent as your professional, but for you to be able to take it to your professional and have, hey, instead of just saying, hey, watch this video where this guy talked about it, you can give them the actual code sections and the specifics, and they'll be able to go from there and say, yes, you can take this position. Here's why. I understand the code. Or maybe they're not versed in the code and they can read up on it and help you take the position. So the first one that I wanted to talk about, it is IRC section 3121 B3A. That section talks specifically about, in the family limited partnership or in the sole proprietor space, that there is no Social Security Medicare taxes on the wages of a child in employment of the parents until they are 18. The next one is IRC section 3306 C5. This section specifically says there's no federal unemployment, that FUTA tax, on the child in employment of the parents until age 21. So here are your specific regs for if you use the right structure and we have real purpose for the child, we can not only pay them the payroll to help us reduce our taxes, but they don't have these payroll tax burdens as well. Just an extra thing to consider here. I know we're a small business and a lot of times cash flow is limited, but there is a thing to be said that when you're paying your children wages, they can now also participate in retirement plans or things of that nature. And money grows over time. So the earlier you can put money in, the larger wealth this is going to be for them in the long run. So if there's additional money, or maybe you want to be able to contribute into your children's retirement because they're participating in wages, they can. And you can use this to really front load a lot of long-term growth for them for a successful retirement in the future. One of the other items that I get in the tax space, there is a tax called the Kiddy Tax. And basically what it does is, and I'm going to use an example. Let's say they have a bunch of investments in stocks and other things, and they're making all this really high income. and they're like, I want to shift some of this income down to my child so they can pay it at lower tax brackets. It's all still in our household, works for us. If you shift your money around, there is a kiddie tax rule that essentially assesses the tax for the child's tax return at the parent's rate. So you can't avoid it. You can't get around it. There's not a trick for it. Now, those specific rules are not for worked earned income. It's for more of the passive type incomes, which is where the wealthy space is trying to shift to the children. The kiddie tax is going to kick in for those. Because this is wages and the child earned it through their own labor, there is no kiddie tax that kicks in for wages paid from the family limited partnership to the child. So if you're concerned about kiddie tax, it's traditionally for passive, and the wages are not passive. And if this is the only thing that you have going on in your child's tax return, they won't have any kiddie tax. I love playing devil's advocate for all the things people tell me, hey, but you can't do this. Hey, but you can't. There's a lot of time and research that's went into being able to present this. And I've done this with clients. I've done this myself personally. So it's not something I'm not versed in. I'm very versed in, but people still want to challenge, how does this work? Or how about, one of my favorites, what about child labor restrictions? There's Fair Labor Standards Act, FLSA. Says kids generally under 14 cannot be employed in non-agricultural work. That's legitimate. And there are state regulations as well. I am out of Nevada, so unfortunately the ones I'm most versed in are just in Nevada. And there are child labor issues there as well where you can't put them to work. They're trying to protect that they don't work too many hours or that they're able to have schoolwork as well. So there are restrictions there. You do need to pay attention to those. Specifically on the Fair Labor Standards Act, which is the federal level of being able to employ a child, it is under Title 29 of the United States Code. They abbreviate it USC, and it's Section 212. Now, under this section, there is a parental exemption under Title 29 USC Section 213C1. It says, a child employed by his or her parent in an occupation other than manufacturing, mining, or hazardous occupations will still qualify to be able to be paid wages. So this is really common. You'll see a family restaurant with a 10-year-old helping out, or kids working in family retail stores, or children cleaning family offices, or kids helping in professional practices, like I mentioned before, maybe answering the phones. So there are plenty of things that children can do, and there are exemptions under the parental exemption. The parental exemption speaks to the same structure that is in the tax code, where it has to be a family limited partnership where the parents are the owners and it's the child of the parent working in that business. It's very specific, or the sole proprietor space, which will also work. Those structures apply here for the child labor concerns the same as they do for, can I pay these wages for income tax? Is this legal? So just talking about kids again and what works. Cleaning the office, fine. Operating a forklift, definitely not. Hazardous occupations are going to be a lot of those jobs that are really more for adults. And in some wild space, maybe they're still allowed to do it, or you're letting your child do it, but you can't pay them for that and use that as a description. It will fall out of the labor law restrictions that we have. So we've talked about setting up a proper structure, paying the children, ways to avoid the payroll taxes to make it even more beneficial. We've talked about what does work, what doesn't work. We've talked about Fair Labor Standards Act and how we can work within those regulations as well so that this works. We've discussed that even if you have a C Corp and you cannot save the payroll taxes, that it may still be beneficial for you by the numbers. So all of those general ideas out there. I have an extra strategy that I like to give at the end. It's not going to be anything different than what we're doing, but it's for people that run a small business. There's always ways to use structures to accomplish what you want in a simple way. I'm always trying to suggest those. This may be the structure exactly for what you need. It may just get you thinking about a different type of structure that benefits you. And I'm always trying to help start that type of process and thoughts. So here's the strategy. You have your main operating entity, whatever that is, the one that faces the public. If you're lucky enough to be able to call it an LLC so that you have that great protection, awesome. You can create what I call a holding company. The holding company, essentially for your main business, is going to hold the assets. So if you have a bunch of machinery and equipment, or it can be as simple as a bunch of desks and computers, whatever the equipment that you have in your main operating business, you can put in a separate company. We'll call it a holding company for now, that holds those assets, and the main entity rents it. Now, the purpose you would move it out is to protect it from liability. If anyone was to sue that main entity, they can, and under LLC, they can sue for whatever's in that LLC bank account or whatever's there at that time. They can still do normal business practice, but there's things that they can attach. And if all your assets are there, they're also attachable. If you have them in an outside company and there's an agreement between them and you're paying regular rents for it, it's protected and outside of being an asset for that, front-facing public company. So it's very common for businesses that have a lot of assets to create a separate company to hold those assets. Now, if you take that separate company that's your holding company and you create it as a family limited partnership to start with, and now you also use it to pay the wages for your children, you don't have to create an extra company just to do wages for your children. You can use your holding company for that. The holding company would be a family limited partnership. Again, I'm not an attorney. I'm not trying to represent or give those type of things, but I am educating in this space and trying to give you some advice for what's good. Please go to your attorney. You get to confirmation for what works for your structure. The holding company is a family limited partnership. It does not have the same protections as an LLC. I would prefer to have all my protections be an LLC. In some spaces, especially as a CPA, you can't be. But those are only particular industries. Your front-facing company is an LLC. The holding company is a family limited partnership. The only person it works with is your LLC. You are not going to sue yourself. So it does not need the same protection like an LLC. Some people are really concerned saying, well, I don't want to make it a family limited partnership because it's not an LLC. I want it to be an LLC. Well, you can have it be a family limited partnership. The nature of how it's working isn't exposed to any outward liability, which is normally what you're protecting against. So again, structure-wise, main operating company, separate family limited partnership, holding company. It's going to hold the assets, rent them, lease them, whatever it is, back and forth to the main entity. Keep that liability safe and protected. And we're also going to double purpose this entity to pay the children wages. So the employment for the children to the main entity, it will pay that money over to the family limited partnership, and the wages will be paid out of the family limited partnership for those children. This is a great way to use the same entities you already have and accomplish what you need. And I'm all about minimizing and simplifying. Those are always going to be your best structures. So that's my rundown on paying your children. There are lots of ways to save taxes. I'm going to continue to give you more on this channel. Please comment if you like what the content is, or if you're going to do it. If you have questions or concerns, I will answer them as well. If it is something that's more specific that you don't want in the general comment, you can DM me on my Instagram page, Best Dressed CPA. I'm glad to help and answer your questions. If there are other tax items that you would like this type of deep dive on, code sections and how they work, so you can present it maybe to your tax professional who doesn't want to take the position or doesn't understand it, please make a comment. I will create those videos for you as well. Thank you for your time.